Morning greetings, fellow traders. This is Austin. It's Friday, January 30th, last session of the first month. 1 month down, 11 more to go. The entire year is ahead of us. Let's deal with today first. Same story, scalping the S&P, looking for anywheres from 2+ points to 4 or 5 points. Occasionally bigger if they will fire off a runner on a trailed stop. But for the most part, I'm just hunting 2, 3, 4, 5 points. Couple times a day, whatever it takes to make 5 handles or better as my daily objective, and then go from there. If I feel like continuing on because price action suggests that's prudent, I will. And if I work real hard to hit 4 or 5 handles and I feel that's enough for the day, I really don't care what happens after that. So there we go. It is 9:29 and we're about to start the circus. See what happens. Okay, it's 9:35 plus. The open range is in place. We've got gap from yesterday's close to today's pit open. Here, got the 233 above. Filter chart is on buy mode, long trade, so I'm looking long side only now. And that would come in around the 2008 mark. So I'd be getting long around 2008, which also, that is a CM pattern sequence, and it also correlates to the top of the open range. So it's always nice when you have confluence. No short trades unless they take out the 2004 zone first, and then I would be looking sell side only. So for now, I'm just looking to get in long, and then the first upside sequences I see overlap around the 2020 mark and then the 2027 mark. Of course, I'd be out long before then and done for the day should that happen. So there we go. Trading the S&P lately is much like trading the Russell used to be before the Russell went completely illiquid. You're getting these 10, 20, 40 point rips multiple times daily, and this is not going to last forever. This is not by any means sustainable for the S&P. It's going to go back to what it's always been soon when liquidity returns. But for now, we're trading some pretty wild swings. Hell, one day where you'll get any given session here where you get 10 points up and 20 down and 30 up and 40 points and so on. I mean, that used to be an entire week. There were entire weeks in 2014 that the range was less than what one intraday oscillation is now. So of course, there's a tremendous amount of opportunity at this moment in time. But all I'm concerned about is the course of a long time. I really don't care to have such myopic short-term view as what's possible today or yesterday or tomorrow. I'm just working towards the consistency of the same thing for weeks and months and years, that which a career is built upon. And for that, give me 4 or 5 handles a day, occasionally more, occasionally less, and life is good. Just add size. 937. Okay, engaged on the first sequence here of the day. Price is tapping the top of open range resistance. I'm just going to take the rest down to 4 ticks here and leave it at that. And then, of course, like I said, I'm looking for upside of 4 handles or greater, first of all, and just a pure dollar target. And then there are layered objectives up around 2015 to 2018. So definitely 9-10 handles potential here. Not that that's what I'm holding for, but might fly up there, whoever knows. So on the other hand, it could hammer the stop out in 2 seconds and we reset. So long side here on a deep pullback into a pattern sequence in the 2006 area. If stopped out, I'd be looking long the 2008 area, and if they keep going, I'm looking to cover in the 2011 plus area. It is 942. Okay, they have gone 3+ handles, and so I'm going to take the risk to scratch. I like to, with the S&P, I like to go +1 tick because that covers the trade costs. And very seldom will you get in a, here's a scenario, the only possible scenario. Some people say, well, if sometimes that one tick difference will be a trade that just stops out right there versus one that runs to infinity. Well, in this case, where we're trading fast charts and we get a lot of signals and a lot of repeat signals and stuff, my philosophy is for all of those trades to get one tick stopped and cover all the costs, every now and then when you get that occasional, it will stop itself out right there on the mark for plus one tick and then continue in favor. Most likely there's going to be a continuation signal to get back in somewheres and capture a relative move. So that's my logic there with the plus one tick thing, because I'm taking a lot of potentially taking a lot of trades, potentially a lot of signals. I just as soon stay, manage the equity curve and stay par as much as possible, and then look for that one sequence. And here we have price doing the rapid V-turn thing. This is about a four-handle swing. While I'm waiting for the 5 points to fulfill. There it went 4 plus and then came right back to like 2 plus or whatever. So I'm just going to leave this stop in place here, and I'm going to look to lock in 4 points in a tick or greater. So I'm going to leave this one alone because it's so early and price has gone nowhere and hasn't done anything. I'm not going to manage this one real frenetically. So that's where we're at. I'm looking for 4 points in a tick minimum, preferably 5 in a tick. If this comes down and gets stopped out at scratch, then we got a whole day ahead of us. A lot of time to start over. 9:45. Okay, still 9:45, and they are moving up through that 5 in a tick zone. There's the 5 in a tick. 5 in a tick out. A hell of a lot of space still to go higher, but we accomplished our objective. We were looking for 5 in a tick, and for my business plan, you can do whatever you want. Obviously, it's a free country and a free world. You can, for those who don't live in this country, you can trade all day, every day. You can trade around the clock. You can trade from Sunday night till Friday's close nonstop. You can do whatever you want. That's your business plan, and that's the beauty of trading as a profession. My business plan, I'm looking to go into any given day, all given days, and realize 5 handles or greater and elect from there. So perhaps I will continue working further today, and perhaps I'm done. We'll sit, watch, and wait for that on my side. But as for my trading business plan, the purpose of trading for money and nothing else, it's already successfully accomplished at 9:47 Eastern. Sit, watch, and wait, see what happens. Okay, gang, here's an update. It is 10:25, and as we discussed, the S&P is doing its wild illiquidity, high volatility, V-turn whipsaw stuff. And there's the 233s. It is 90% probable, not guaranteed, but 90% probable to hit one of these today. All right, so you can watch further and you can trade further and you can target that or that if you prefer, because this is a free choice world in the trading arena anyways, and it is your business to conduct the best way you see fit. And there's a 90% probability on any given day, today or otherwise, that one or the other or both of those levels will be hit. And then 10% of the time they're not. All right, so it could be one of those. In my case, I'm done. I accomplished what I wanted to, as noted from the business aspect side. I was interested in trend continuation. Now, if they had done this, went up, pulled back, handled this pullback, and then continued up, I would have targeted trend continuation and go from there. But instead, I see we have just unruly, unstructured V-turns where a lot of the HFTs are shut off due to high volatility, and they're not active in the market, so all of the magnetism to the market profile levels and the volume weighted average price and that stuff's out the window because most of the controllers of that are gone. And let me say this, I've seen conversations in the past and even recently where S&P traders will say, well, The secret to trading is not to worry about technical levels, is to think about the other guy. What's the other guy doing? Where is the other guy experiencing pain or needing to get out, and then do the opposite? That kind of logic went out 15 years ago. There's no other guy. The other guys are dead and gone. They're out of the market. It is you against machines. You can't think about what's the other guy doing here or there. There is no other guy. What are those robots doing? What are those algorithms doing? And I'll tell you what they're doing. They're pinging off technical levels. Your systematic approach damn well better be designed around mathematical, statistical, technical levels. If you try to trade anything, starting with the S&P specifically, through human logic or reason, trying to figure out what other humans are doing, you might as well take the money out of your account and put it in a pile on the table and light it on fire, because it's going to be gone equally so no matter what. You need a system that will show you statistically, mathematically, price action based, where support and resistance is, and not worry about what the other guy might do and try to figure that stuff out. And then you can make money. You can make ridiculous amounts of money if you will let the market tell you what it's going to do, rather than try and figure out what non-existent other people might do. And in my case today, the machines are idle. That's the way it is, and it's pinging around. So you can stay with it, and you can keep shorting on the way down, you can keep buying on the way up, and you might have greater results. You might have fantastic results in the end, and you might not. You might get churned to pieces. Nobody knows ahead of time. There is no hindsight in results. So in my case, 5 handles and a tick wraps it for the day. Wraps it for the week. It's been a hell of a good week, and I expect more to come. Hope this helps. I will see you in the live room for those of you who are on board with the team. And as always, best trading wishes.